So in today's video, I'm going to show you the most accurate 1-minute scalping trading strategy that I actually never shared on this channel before. It's super simple to follow and it's built around only one and the most popular TradingView indicator. So without further ado, let's begin. So step 1 is to open TradingView or whatever trading platform you are using, and let's add the indicators first. So to do that, just go to the indicators tab and type in moving average, and it's going to be this one right over here, but make sure to click on it 3 times as we will need 3 of them. So in order to make the strategy work as it's designed to, we will have to adjust the settings for each moving average, so follow me along. So to access the settings, click on this gear icon over here, and inside the input section, just change the value from default to the value of 20 and click OK. The next moving average needs to be set at 40 and the last one will be set at the value of 80. You can always change the color for each moving average to green, blue, red, pink, etc. So the color is your personal reference, but I like to keep it bright just to see better. So the reason I share this strategy today is that this strategy can be used on any given time frame as long as you trade with a trend and you are not limited to one type of trading style, so you can swing trade, day trade, and yes, you can even scalp. And this trading strategy can be a great addition to your current trading plan because it's incredibly easy to follow and understand its use. So as we move along, the step 2 is to identify the current market direction. And to find the trend, you simply need to observe where the price action is moving and then determine whether it is above or below the moving averages. So when the price is above the 3 moving averages, it's an indication of an uptrend, and this uptrend is categorized by a pattern of higher highs and higher lows. However, if the price consistently falls below the 3 moving averages, it usually indicates a downtrend. And in such cases, you will often observe how the price forms a pattern similar to a descending steps, forming lower highs and lower lows. But let's say if the market is flat, you will notice how the price action isn't making any new highs or lows, but rather staying stagnant. And in this phase, the price moves just horizontally, often referred to as the sideways market. And when you are using this type of trading strategy, I recommend avoiding this type of market when looking for trading opportunities because we are seeking for a trending market instead. So before we move along with the video, if you have been searching for free trading ideas, or if you're interested in following my trades and seeing this kind of success I have had recently, then joining my group is the best thing you can do. And for those who really want to dive deep and trade like a pro, then my ultimate price action course is the way to go. It's basically all my best knowledge from the last 5 years condensed into something that can really accelerate the way you learn trading. And of course, you will find all the links in my description box down below. So let's now discuss the rules for executing buy and sell trades. So for sell trade within a downtrend, the approach is very straightforward. So first of all, you have to ensure that the price remains below the lowest moving average, indicating a strong downtrend. And then you have to wait for a complete candle to close below this moving average, confirming that the market is committed to this downtrend. So once you see this occur, the next step is to wait for the price to pull back. Now this pullback is a slight upward movement, but it doesn't surpass the moving averages, acting as a temporary pause rather than a reversal. So to determine the exact point of entry after that pullback, you basically have 2 options. Now the first option, you can switch to a lower time frame for a more detailed view, or you can remain in your current time frame for a broader outlook. So because I'm currently on the 1-minute time frame, I will stick to it, but let's say if you are on a 5-minute chart, you can simply switch to the 1-minute time frame and use it as an entry. Now this is very important to keep in mind, but the key is to ensure that the entire candlestick has closed completely below all the moving averages. So remember that the price action doesn't necessarily have to go back and touch the moving averages. What's actually crucial is to confirm that there was a pullback in the price and then a continuation of the current trend. So step 3 in our trading strategy focuses on setting the stop loss effectively. Now when you place your stop loss, it should be positioned just above this highest moving average line. And this placement is strategic because it actually allows you for some market fluctuation while still protecting you from your significant losses. However, there is always however, but it's very important to remember that the size of your stop loss will vary based on the time frame you are trading in. So for scalpers, a tight stop loss, which is around 5 to 10 pips, is very common to use, but on the other hand, day traders, they typically set a wider stop loss ranging from 30 to 50 pips just to accommodate the larger price movements expected over the course of a day. Now, for taking a profit, you actually have two very effective options to choose from. So for example, if you set your stop loss at 10 pips on your trade, you could set your take profit at 20 pips, establishing a 1 to 2 risk reward ratio. On the other hand, you can actually use key support and resistance levels to determine your take profit target. So let's say if you are in a sell position, you can look for the next significant support level and then set your take profit target just slightly above it. And this strategy is based on the tendency of prices to pause or reverse at these levels. Now, to enter a buy position in an uptrend, you will essentially reverse the strategy used for a sell position in a downtrend. So the first thing you need to do is to begin by confirming that the price is consistently staying above all the moving averages, which basically signals a strong uptrend and suggests that the market is leaning towards upward momentum. The next crucial step is to wait for the entire candle to close above this moving average. And this is a clear sign that the buyers are in control and the market is solidifying its upward path. So following this, your attention now should shift to observing a pullback in the price. Now, this pullback is a slight downward movement and should not cross below all the moving averages, so it's more like a brief dip or a pause in an upward trend. And after this pullback, the critical moment comes when the price starts moving upwards again. So that resumption of the uptrend at this point indicates a strong entry opportunity for a buy trade. And when it comes to setting your stop loss and take profit levels, consider placing the stop loss just below the lowest moving average, or you can even place it based on predetermined your risk reward strategy. Okay, so based on what we have discussed so far, let me just walk you through a trade that I took yesterday. So this is GBP USD on a 1 minute time frame. So the reason I entered this trade is because GBP USD was in a strong uptrend on a 50-minute chart as well as on a 5-minute chart, just basically making higher highs. So what I did next is I basically narrowed to the 1 minute time frame, and the bullish bias can also be seen over here. We have a nice uptrend, the resistance was broken, and now it stands as a support. Now I will slightly zoom in so you will be able to see it better, but this is the pullback that I was talking about. But as you can see, the candlestick never closed all the moving averages. It was basically rejected by this support level over here. And as you can see, the candlestick eventually closed as a bullish engulfing, confirming that the buyers are taking control again, and I entered the trade on a closure. So this time I aimed for 1 to 2 risk to reward ratio, but as a cherry on top, I also marked this 50-minute resistance zone as a potential profit target zone. As you can probably tell, the result is very obvious. I did reach my take profit target. As you can see, it literally bounced off that resistance zone. Of course, guys, before you start bombarding me in the comments, I took way more than one trade, but to show and break them all down for you, it would probably take me like an hour. But I just want to show you that this trading strategy is simple, effective, and when everything lines up, it's just so incredibly satisfying to watch those profit targets being hit. So if you enjoyed this video, make sure to let me know in the comments down below, and you might want to check out this previous video over here where I share my personal experience how the Forex tester has been a game changer for me.